This week, we're talking about one of the top 3 ways to make your income statement more helpful: prepaids. A prepaid account is like a holding account on the balance sheet to keep expenses off of the income statement until they're going to be used. If you have no process in place for recording prepaids, then your income statement will never be as helpful as it could be. To make the income statement really helpful in evaluating the hotel's performance each month, it's important to have only the expenses for that specific month on the income statement. So if you get an invoice for next month's rent or an insurance policy that covers 6 months, the team needs to know the best practice for coding those invoices to prepaid and then getting them on the income statement at the right time. One of the biggest traps I see people fall into, though, and what I want to cover in this video, is the process for not only getting invoices coded to a prepaid account, but also getting things moved out of that prepaid account. Here are my top 2 tips for getting this process right. 1, set a threshold for what amount can be coded to prepaid. The prepaid account requires a detailed schedule for the accountant to keep, along with the journal entries for getting those things moved out at the appropriate time. So coding every single invoice to prepaid because $20 of it might be used the following month is no good. There will be a way bigger cost to that than reward if too many items are coded to prepaid. So you may have a threshold like no invoice less than $1,000 can be coded to prepaid. All right, number 2, when an invoice is coded to prepaid, it has to have a description that says when and how it should be moved out of that prepaid account. So like I mentioned before, it's just a holding account. There has to be a plan for moving that out to the income statement. The person who's looking at that invoice and deciding that it's a prepaid, they're in the best position to say, and it needs to be moved out onto the income statement at this date, and it needs to go to this account. So if that's a service that covers multiple months, then your description might be something like, expense to rooms contract services, January through June. Again, have a threshold for what can be coded to prepaid and require a description that says how and when an item should be moved out of that prepaid account. So your tip for the week is to code invoices that are going to be used in the future to a prepaid account, so they'll show up on your income statement at the right time. This will help you use your income statement to evaluate the exact operations of the hotel each month. If you found this video helpful, follow us for more tips on building your team and improving your financial statements. And if you'd like more than tips, you'd like an actual trusted team of industry experts to produce your hotel financial statements monthly, we're here for you. You can simply outsource the monthly financial process to us so you can focus on the parts of the hotel business that you love. All right, thanks for watching. Have a great day.